SoFi and stock market investors, welcome back to the channel. My name is Jason. Today we're going to be discussing 5 things SoFi investors can look forward to over the next 2 years. This week has been crazy, SoFi investors. At the beginning of the week, we were closing in on 19 bucks per share, and then the market took a huge shit late this week, especially on Friday, and the stock is back in the $16 range. Actually touched in the 15s on Friday. What a crazy week it's been for the stock market in general. And there's starting to be a lot of deals we can look forward to in the coming weeks. Is this sell-off going to continue into the summer? We'll have to wait and see how that all plays out. Hopefully the war is winding down with the recent vote in Congress. So we'll see how that goes. If oil continues to go down and earnings look good, I think the market could turn around this summer, but we'll have to see. But I want to give some SoFi positivity. So here are 5 things we can look forward to over the next 2 coming years. All right, SoFi investors, take a look at your screen right now. But before you do that, make sure you hit that like button, the hype button, and subscribe to the channel. We just crossed 5,000 subscribers. You guys are the shit. All right, let's get into it. We closed at what, 1578? What a shit show. The market took a huge dump on Friday. The Nasdaq was down over 4% in one day. One of the worst days I've ever seen in covering the stock market over the last, 5 or 7 years in one day. Crazy shit show. So we were trading in that 1575 range, and then we ran up about 22%. In a couple of weeks, the stock was looking good. There was some positivity and some tailwinds going for the stock, and then the overall market took a shit, and we lost all those gains in a matter of a couple of days. It's been a weird roller coaster for SoFi stock in general over the last year or so. Because if we look at last November, those highs of 32 bucks per share, and then it's been not good, down nearly 50%. Has not been good for the stock. But the company has looked better than ever, so we got to just stay the course, guys. So that's why I want to look at some positive things for the stock moving forward. Here are 5 things to look forward to over the next couple of years. Number 1, massive compounding earnings growth. Management projects 38 to 42% compound annual growth rate for adjusted earnings per share, that's EPS, through 2028. Driven by high margin financial service scaling. You got to love that. So this fee-based revenue and the financial services part of this business model is very capital light, but makes a lot of money for the overall company. I love that. Will this shift happen with the PE compression, whether it stays like a bank, or is it more of a fintech play? And then also 18 consecutive quarters meeting the strict rule of 40 financial threshold. That is incredible stuff there, guys. It is just what we want here on this channel. Taking a look at SoFi overall. Here we go. Here's the estimated 5-year EPS forecast from 26 to 2030. We'll probably do around 59 to 60 cents. That's what management is expecting. We've got a long way to go to get to that point. So hopefully these next 2 quarters will be very profitable for SoFi stock. Then they're looking at 77 cents to 84 cents in 2027. And if we look down in this 5-year horizon by 3030, we're looking at $1.25 to $1.44. But if some of these other business models that they have work out, like the tech sector, the fee-based revenue, the mortgages, and as interest rates go down, SoFi is going to be a huge benefactor of that. Now the market's pricing in a rate hike. What's going to happen there? I think we're going to stand pat more than we are going to raise rates. I think raising rates would not be good overall, but we'll have to see. We'll have to keep an eye on inflation. Obviously, when oil prices are really, really high, it trickles down throughout the entire economy. It's not just at the pump. Everything costs more. So these oil prices are directly causing inflation all across the board when we take a look at those numbers coming out with inflation on a month-to-month basis. But this EPS growth could be huge catalyst for the stock moving forward, and I think we're just scratching the surface of where the earnings could potentially go. And maybe at some point, 3, 4, 5 years down the road, some buying back some of these shares could be on the horizon for SoFi stock. Okay, here we go. High velocity member expansion. The company continues to expand its one-stop shop banking ecosystem, and they're looking at focusing on younger, affluent, college graduates, and people that are financially sound, getting them in at a young age so they could eventually have mortgages, auto loans, personal loans, investing, all of those different facets of this business model. So projected to hit over 17.7 million members by the close of the next fiscal year. The cross-selling will be huge for this company moving forward. If we take a look, here are some projections and the growth rates of members. So by the end of 2026, with a 30% management guide, that would put us right in the high 17 millions. I would love for them to cross 18 million. Especially the Super Bowl is going to be played at SoFi Stadium in early 2027. So that's huge. There's going to be tons of SoFi advertising. So that brand awareness could get a tick up late in the year 2026 or be huge in early 2027. Their estimate growth year over year, 22% for the next 2 years after 2026, then down to 12% and 10%. If we could keep these numbers in the 20% range, we're looking at, closer to 40 million members by the end of 2030, as opposed to this conservative guide of 10% here at 32.7 million. I'm hoping by the end of 2030, 40 to 50 million. I do want to see this 30% hang on a little longer than, just 2026. If we could keep and maintain 25 to 30% over the next 5 years, we're looking at between 35 and 40 million plus members. And from all the projections that they're doing, the members are turning into product buys in one way or the other. It's not just like this number is getting super conflated and it's not actually turning into revenue on the top and the bottom line. But if we're anywhere from 35 to 45 million members by the end of 2030, I will be happy with that. 32 million with the 12% and 10% gains in 29 and 2030, that's a conservative estimate. So I want to keep it over 20% for the next 5 years. With that, we're looking around 40 million members on the SoFi platform. And I'm also looking at international expansion over the next 5 or so years. And once we get to be that household name in the States, if we can expand overseas in Europe, South America, that would be huge for the platform, in my opinion. I would love to see them expand into Asia at some point as well. So that's something to look forward to. We get 40 million plus members by 2030. We'd be cooking with gas, guys. All right, next, expansion of next generation blockchain and AI features. Okay, so they just released SoFi USD and entering this tokenized ecosystem. So they are the first U.S. national bank to issue a stablecoin. So if this becomes a way that banks can transfer money across banking platforms, across international borders, this is going to be a lot of fee-based revenue coming for SoFi. Even if the fees are super low, if we're talking about big dollar amounts, those little fees add up big time on the bottom and top line for SoFi. And this part of the business model, in my opinion, is the most important. If we could get that fee-based revenue up, huge capital light, this is where margins are going to expand and they're going to get a higher multiple, moving forward than your typical banks. Because they don't have all these brick and mortars that are kind of compressing margins, right? We want to expand these margins. I think having a stable coin is a great way to do that. They also are expanding their AI footprint with AI financial integration. The platform recently integrated SoFi Coach. This is an advanced generative AI designed to handle automated personal financial tracking and advisory services. I do love that aspect of it. And they can collect fees on this and not necessarily have to pay financial advisors to do this. They're going to have less actual financial advisors that will oversee the AI financial integrations, again, expanding margins, in my opinion. All right, next up, capital light lending business scaling. The business model is transitioning rapidly away from pure balance sheet lending towards an institutional loan platform. This reduces overall balance sheet credit exposure and cyclical macro risk. So fee-based revenue is always the way to go, because if you have a ton of loans on your balance sheet and that's the only way you are making money, there are ebbs and flows to those cycles, right? With higher interest rates being not good and the lower interest rates, the boom and bust cycle, you got to be careful to not get over leveraged. And if Anthony Noto can continue to not over leverage the bank, I think we're going to be in good hands moving forward. Reliable, highly scalable advisory and fee-based revenue. We love that. Fueled by deep institutional buying commitments, including over $3.6 billion secured in recent quarters. So we love that moving forward. Here is a 5-year fee-based revenue projection, 2026 through 2030. We'll be at $1.85 million. And if we can keep this percentage here in the high 30%, we're going to be looking at anywhere from $3.25 billion to $4 billion in fee-based revenue moving forward. And I honestly wouldn't be surprised if we blow these numbers out of the water. Here are the growth drivers from 26 to 2030. Relaunch SoFi Plus subscription expansion of big business banking. Big business banking is huge because big business banking with the big businesses, a lot more money. And then with the fees, they will collect more money, the more money that's being financed for these big business banking companies. Deepening cross-sell engine, average revenue per product expanding past $104. Again, like I was saying before, these members are turning in to a lot of money per user, which we love. So this is huge as well. What the hell's going on with Galileo, which has been extremely disappointing over the last several years. There's no other way around it. There's no way to sugarcoat it. Galileo has been exceptionally disappointing, especially because they paid a shitload of money for it. So it hasn't been great. Can they get it scaled into corporate banking and implement that product? That remains to be seen. Stablecoin adoption will be huge as well. And mature high margin asset management, brokerage, and third-party loan servicing. This is and has the potential to be a true one-stop shop for all of your needs, from small business to big business to home loans, auto loans, personal loans, whatever you need. I do think that this fee-based revenue part of this business model is going to give it some stability into the future, and I love that part of the business model. And then last, transition to a broad capital market and tech play. So will Wall Street re-rate them as a tech play, or will they kind of be more with a bank multiple with high growth? Kind of in the middle of both of those two. Traditional bank, PEs in the low teens, which is not good. And a price to sales that's not super great. If it's kind of rated that way, SoFi growth is going to be stunted because of it. So we really need the tech platform to expand so we can get a software like a service multiple. But then again, AI has kind of been destroying some of these SaaS companies. Will that ultimately play out over time? I don't know. I do think the AI, pandemonium is a little overblown in my opinion. I don't think 5 years from now no one's going to have jobs and AI is just going to do everything. I'm not in that car of ideology. I don't really see that happening. Acquiring digital underwriting structures to offer everyday retail investors direct, unprecedented access to initial public offerings. So they are starting to get interest on the SpaceX IPO that will be available to members. That's huge. So that's going to get people on the platform excited about the platform moving forward. So as long as SoFi continues to get member engagement and keep that engagement high and get people excited about their financial futures, I think this is a great structure to make this company what Anthony Noto's suggests could be a $1 trillion company. Obviously, that's not going to happen anytime soon, but in a recent interview, he suggested that he thought there was no reason why SoFi can't be a $1 trillion company in the future. That's great to hear for SoFi investors, that is for sure. I'm going to do a video breaking down my thoughts on that at a later date, so make sure you tune in and subscribe to the channel for that. And one last little tidbit that I want to sprinkle in, a sixth one, is the S&P 500 inclusion. Where is this going to happen? When is it going to happen? So I don't think it's going to happen in June. I don't think it's going to happen. Probably not in September either. I'm circling this December inclusion rate. So right now, the market cap for SoFi is right around the threshold of 22.7 billion. And typically, the S&P 500 doesn't like to include companies on the borderline, because if it falls lower, then they could get kicked out of the S&P 500. So for me, I don't think that happens anytime soon. I don't think it's going to happen in the third week of June or the third week of September. I'm looking at December or the first half of 2027. That's kind of where my head's at with all of this. The profitability is there. 10 consecutive quarters of GAAP profitability, but the market cap is still low when you're looking at the S&P 500 market caps per company in totality. So don't get too overblown on that. It could happen, but I'm thinking later this year, early next year. That's kind of where I'm at. And yeah, late 2026, early 2027. But they got to keep becoming profitable quarter after quarter, quarter after quarter, year after year. Kalshi is a prediction market saying low probability, less than 10% to be chosen for immediate inclusion. So we're looking at, I'm saying December or the first quarter, first half of 2027, guys. So there it is. There are my 5 things to look forward to in the next 2 years for SoFi. Massive compounding earnings growth, high velocity member expansion, expansion of next generation blockchain AI features, capital light lending business. I love that for sure, and scaling. And then number 5, transition to a broad capital markets and tech play. And then the bonus, S&P 500 inclusion. There it is, guys. If you want more content like this, please consider subscribing to the channel. You guys are the best. Peace.